Guys, good morning. Good to have you both.
Good morning.
Scott, let me just start with the quarter itself and this idea. Some have argued that content spend got pushed into Q4. That's why they were able to beat and why guidance on Q4 was weak. Is that valid?
I think what you have is that you had a modest sub-beat in 3Q, and then where consensus was for subscribers for 4Q, where the guidance came in, was basically in line. But the company also said that subscribers were accelerating exiting 3Q, and the strongest period of the year really is the month of December, and then followed by the month of January. So it does look like the company's now set up to beat subscriber estimates in 4Q and potentially raise 1Q estimates. So we're quite constructive on the stock, but I think that's the explanation for why the stock's weak.
Alan, what's your take on this rather expansive view of content budget, especially coming off of a big hit that was made for very little money? Some have tried to argue that if they did that repeatedly, they could overall lower their cost of production.
Yeah, I mean, Netflix has been growing their content spend each and every year by billions of dollars. They're at $17 billion to spend this year. We think they'll be at $25 billion to spend by 2025. Yeah, as they continue to gain, as streaming continues to gain share from linear, you're just seeing money moving from linear TV budgets to streaming budgets. There's probably $100 billion spent on entertainment content per year, so it's just going to be shifting over to streaming, and Netflix is capturing share.
Scott, North America, the market here, is it saturated? Does it actually matter when you think about the content lineup and how focused globally across so many different markets the company is with its future production?
The U.S. is quite well penetrated. I mean, subscribers in the U.S. are approaching cable levels, but the vast majority of the growth that we have modeled over the next 5 years comes from markets outside the U.S. 120 million subscribers, are being added over the next 5 years, and about 95% of that's coming from outside the U.S. So we're fine with the maturity of the U.S. market. With that, you have lower ARPU as well, but the company, infuses pricing each year. So overall ARPU globally is actually rising, even as growth in lower price markets is driving subscriber growth.
So, Alan, given the fact that from the last earnings report to yesterday's earnings report, we saw Netflix shares jump more than 20%. How much is baked into the stock here? How much further could it move in the coming weeks, coming months?
Yeah, I would say it is up 20% since the last earnings report, but the stock had a tough year for the beginning of the year, so it's actually up, I think, less than the S&P year to date. The numbers look good. We recently raised our price target to $700 a share. And I think what you really need to see is the fourth quarter content, which is expected to be so good. We need to see the engagement in the fourth quarter content. And I would say I agree with Scott. I do think their guidance for 4Q is a bit conservative. If you look historically, they've beaten their guidance 75% of the time. So they say that they give it to us as they see it, but they've beaten 75% of the time. And I think they beat the 8.5 million subs that they've projected for 4Q.